Hello, I'm Greg Bennell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights, help boost your trading potential. Coming up, we got a Fed rate decision in the offing. It could send ripples across the markets. Plus, Ethereum, the world's second largest cryptocurrency, it's been under pressure. We're going to break down the key levels that could decide its next big move. And we're putting the spotlight on SoFi Technologies this week. The stock, will it keep climbing or are there trouble signs ahead? Trading debaters are standing by with the bull and bear cases. That is all ahead. Don't forget to like and subscribe. You're watching TD Active Trader Live. Fed has entered its two-day meeting. They come out tomorrow with a rate decision in the afternoon. Ahead of that, the S&P 500 and the broader markets a little bit off of their all-time highs. Nothing too dramatic right now, perhaps a little caution ahead of that decision. There's a lot of drama around it. The street is expecting a 25 basis point cut, but what do you hear around the table? What's the tone about the path going forward? Lots of big questions. Want to see what's happening on the heat map right now to explain why we've got a bit of weakness, and you can see it is those big tech plays. If they can lift this market up on their shoulders, well, when they're down modestly, like in Nvidia, less than 1%, Microsoft, Google, it does take points off the table. Apple's managed to hang in there, though, but some of the financial services stocks are also under pressure as well, so keeping us back from a better showing. Again, it's a modest pullback. These are markets that have been hitting new all-time highs. Nothing really to get concerned about at this point. Let's check in on Oracle, though. There it is, one of the green spots on that heat map. There's an unconfirmed report out there. Well, first, here's the question. Let's pose the question to you. If TikTok is allowed to operate in the United States, which companies would take part in that? Well, there's a report out there citing sources, unconfirmed. Oracle is among a consortium of firms that would enable TikTok to continue operating in the United States. That is, of course, if you get that framework deal all finalized between the U.S. and China, but it's enough to get Oracle up about 3-4% right now. Dave & Buster's, big pullback. Last time I checked on the screen, down about 15%. You can see that drop off into the early morning action. What's going on here? Have you been to one before? Like restaurant, entertainment, arcade, food, that kind of stuff, big screens to watch things on. Second quarter earnings falling well short of expectations. The shares are tumbling on that. Same store sales are under pressure. They got a new CEO at Dave & Buster's leading a turnaround effort. Only been in the chair for about 2 months. They're saying some execution missteps for this quarter are behind this big miss in adjusted earnings. They came in at 40 cents a share. The street was looking for 91, so you can understand the reaction in the stock. And that's your market update. We'll take on what's happening out there in the markets. It is Hiran Amin and Jason Nadek from our direct investing educational team. I was going to say, and the stars of our show. Welcome back, gentlemen.
Yeah, it feels great to be back, Greg.
All right, let's dig in then. Obviously, there's a lot going on in the markets right now. A Fed decision in the offing. You're going to start with the 10-year Treasury yield.
Yeah, obviously treasuries are moving, of course, with the looming Fed decision that's coming out, Greg. So we figured let's look at the 10-year Treasury yield. Ticker symbol I've got on is TNX, but just what's been the background in shaping this so far. So just for our viewers to let them know why the 10-year Treasury bond yield, essentially it's the interest rate that the U.S. government pays to borrow money for a decade. And we know with debt and everything, that's a big factor in how that yield moves. And really serves the benchmark for other interest rates, especially for mortgage rates in the United States. Now, what we are seeing is when bond yields tend to drop, it has an inverse relationship with prices. So we are seeing, obviously, bond prices go up where yields come down. Now, this is important because what this means is that other asset classes will react to this. When you're having yields go down, it also affects the U.S. dollar that we know. So a weaker U.S. dollar with lower rates means investors are looking for opportunities in other areas to get that yield. So what we have seen is just yesterday, I've got the chart pulled up. And what we've seen shaped so far this year is we did see this big downward trend that's emerged, and it's kind of respected that upper boundary right now. It's almost formed like a descending triangle one could look at, and we've seen it reject off of this. Every time it comes up to this boundary area, it's been rejecting off of that right now. But what happened over the past few days, and it's a daily chart here, we saw it break this key level, which is sitting about that 4.14% yield. And it's actually broken below that. Now, it hadn't done that all year long, except for in April when we saw the big fall in the yields coming down to touching almost like kissing that 3.8 level and then bouncing shortly back up. But we've actually seen sustained day-over-day pressure coming down where it's touched the 4%. This is the kind of support area we're looking at right now where we saw the bounce off happen in April, and it is kind of bouncing off of that. But so that's a key level that we want to be looking at. A lot of this is going to stem on, again, what is the tone going to be coming out of the comments from the Fed meeting. Dovish plot, dovish dot plot, which is what's going to be looked at, and a conciliatory sort of tone from Fed Chair Powell could spark a further rally by prompting expectations for more rate cuts ahead. And so we should see that add more pressure to the yield. So the 10-year is one to keep an eye on. I'm keeping a very close eye on that 4% yield and see if that can hold. If not, we could be testing further down closer to that 3.8% yield. And that would be a bond rally there.
That is a key one when we're talking about the Fed and treasuries and yields. What about crypto, Ethereum? You're taking a look at Ethereum.
We're looking at Ethereum. Yeah, as you mentioned at the top, this is the second largest by market capitalization cryptocurrency that's out there trading Bitcoin. But also kind of on the same themes, because we're seeing if there's yields coming down, there's more risk appetite in the markets. And what's more risk on than crypto, the crypto space and Ethereum especially. Now, crypto bros, of course, have been getting excited about the Fed decision. Again, what we saw with Ethereum is kind of a big turnaround story compared to Bitcoin, very different story. Now, one of the key themes I just wanted to explore with Ethereum was that it is transitioning from more of a speculative token to one that's becoming almost a reserve of choice for institutions as well as large-scale investors. And here's some of the stats to kind of back it up. So Ether ETFs, which kind of got their nod earlier this year, they've been kind of the defining catalyst in this rally. So 9 of the US listed funds right now hold roughly about 6.7 million Ether coins. And that's almost double the level from when the rally began in April, in fact. Now, also, Crypto Quant report, which analyzes kind of Ethereum, they also noted that daily transactions had spiked to 1.7 million in mid-August. And the number of active addresses reached a high of 800,000. So it's really, it underscores the fact that Ether is growing as a backbone for decentralized finance, essentially, stable coins and tokenized assets. And tokenization is becoming more of a theme now across the board. But when we look at the charts, this is what I wanted to point out. We saw it kind of been in the slump since the beginning of the year. We saw this big downtrend. It broke it. This was the time when it also broke the 50 EMA on this big candle over here. And then this is when the rally really began in that early May period. Since then, it's kind of had a bit of a big burst in its price action here, topping out at this key resistance level. Now, this key resistance level, which is sitting at close to that 4,900, it hasn't touched in years. And I've just zoomed out to going back to 2021 there. So we'll zoom back in and bring it back to where we are. So this is a key level where we're looking at Ethereum. It has formed this pennant formation, which is a bullish sort of signal pushing upwards, Greg. So what we want to see, we did see the breakout. It's testing the flag again, but we do, or I should say pennant. So we do want to see it break, touch the 4,900 and see if we can clear that on its way to 5,000 and more. We'll see what the rest of the year holds up on the crypto space with that.
Bonds and crypto. What do you got for us, Jay?
We're moving on to looking at a airline manufacturer, or a plane manufacturer more specifically. You're looking at Boeing here. Boeing had, their price has been moving up in a positive direction, but just maybe when it kind of rains, it pours. And there's been 3 major events from a news perspective that have kind of jumped out of their way, and they just seem there's been a number. Let's just rattle off those things. We know that there is a work action going on at their St. Louis, Missouri factory where they produce, fighter jets and other military hardware. The FAA has finally circled around, and they've not released what those penalties could be, but they're recommending fines. We can remember back to the Alaska Air where they had the discharge of the exit door, amongst other things that they found in their investigation. But the big one that really caught my eye was last week, and we've already started to see some price action on the chart, is around the manufacturing delays of their newest Boeing 777X. It's their wide-body plane. They can hold up in certain configurations up to 400 passengers. This is a big deal for them. And mind you, silver lining, they've already sold 600 of these planes, but they've already come out and said their term, they have mountains of work before they can get this thing certified and get it off the ground. This was supposed to be ready in 2020. Now they're thinking 2026, maybe 2027 is when delivery might start to start to happen. So that might start to impact revenues, and they might even have to bring in compensation for airlines if delays continue to pile up, which is a distinct possibility. So let's take a look at their chart. We can see the run up in the price, from the middle of spring last year up into kind of mid-summertime. 120, 115% or so is what the stock is. It was on quite the run, but it's been a little choppy ever since. We're noticing on the chart there's your kind of a very common reversal pattern. The double top's been noted there. The stock's pulled back and broken down through the neckline of that pattern. One thing's just looking that's we're always looking for confirmations in the technical analysis space. A couple quick things that I noticed. When it broke down through the neckline, price crossed the moving average, noticing that. It also was confirmed on larger volumes. So as we saw the price start to pull back, maybe there's a little profit taking that's going on there, hard to tell, but the market has begun to sell off, and we're now approaching a gap that was in play earlier in the year. So we'll see if the buyers will step in, or if we're going to slip down through that gap that was already demonstrated early in the year. So still questions to be answered here.
Great breakdown. When you said 400 people, I thought, I just know if I was on one of those planes, I'd be passenger 399 waiting to get off at the end, sort of thing.
Yeah,
That's always,
not ideal.
Yeah.
Right.
Ain't fun getting on a plane, ain't fun getting off. It is fun getting to where you're going.
They do have the double aisles, so they're thinking about passenger comfort to some degree in this, but yeah, it's all about getting maximum occupancy in these new jets. So.
Thanks for that, gentlemen. If you have a question for us at home, you can't find our team at home, but you at home have a question for our team here. Here's how you get in touch with us. Email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It'll take you to our TD Active Trader Live website, where you can try out the TD Active Trader platform risk-free. You just open a practice account, and you do that by clicking on that Try TD Active Trader button. Once you're ready to switch to a live account, you simply export your workspace and start trading for real. It is time now for Trading Debating. This week, the stock in the spotlight, SoFi Technologies, is a fintech platform, combines lending, banking, investing, and financial services in one digital app. Before we get going with that debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now back to the stock of the hour, SoFi Technologies. What made you guys pick this one to debate?
Great question, Greg. You've seen a lot of changes happening in the banking industry, of course, but one thing that's kind of remained constant for decades is the desire for executives to plaster their institution's name on large event spaces, and that's really what got me into it, specifically sports venues.
Right.
And this one stands out since...
You're seeing them all over the place, SoFi.
Exactly.
SoFi.
You can't miss it. SoFi splashed a cool $625 million. It's the largest sum on record for the naming rights of SoFi Stadium, which plays home to LA Chargers and the LA Rams.
Yeah.
And it'll also host the closing ceremonies for 2028. So for the Olympics, Summer Olympics, I should say. So that got me asking questions and made it debate worthy.
All right, what catches your eye on this?
Yeah, I'm in the same boat to a degree with hearing. Like, they had the Super Bowl, was it 2022, I believe, and so that kind of piqued everyone's curiosity. Who is this company? But they've in a competitive marketplace, they've kind of targeted kind of younger, affluent people and trying to create a moat for themselves. And it's interesting to learn a little bit more about them.
When SoFi realizes all that big spend caught the attention of us here at TD, man, that was worth it.
Yeah. It's worth it, yeah.
We got a trading debate. I'm sure you're watching. All right, let's get some time on the clock. We're going to have 2.5 minutes each to make the case, as always. You guys draw from a hat. We figured out who the bull and the bear is going to be. So, Jason, you're the bull.
I'm the bull. Let's do this here. So, if we're thinking about kind of storied financial institutions, well, think about it, how advantaged it might be for a company that doesn't need to start with all of that baggage. They don't need to start with all of those, we do this just because this is the way things have always done. All that history that is tying them to a business model. Well, SoFi has the advantage of starting things from the ground up. Here, they're not saddled with a branch network. They don't have this infrastructure legacy that they're beholden to. Instead, they got to focus their time, they got to focus their efforts, they got to focus their capital on doing what their clients want, what they think they can do to attract more business, and also what most importantly, which we'll get to, is trying to come up with a more fulsome relationship to make those relationships more sticky. So they're using technology to make things easier, to make their tools smarter. Their apps are designed, as I said earlier, to attract kind of younger, more affluent. It's a financial technology company. So they're looking to attract a similar client base. So they're using AI robo-advisors in their apps. They're designing things from the bank up. You don't need, as I said, you don't need to go to a branch. Everything in the palm of your hand, everything on your desktop. It's that easy. Now, there's been other financial institutions that have tried to go this route to make it all digital. Well, guess what? Through SoFi, they actually had a national bank charter in June of 2022. This has opened up a whole realm of possibilities for them. It's allowed them to sit on more deposits. They've been able to generate more assets under management. So we're talking over $30 billion of increases in the last 3 years alone. Their client base has grown significantly along with that too. It's 1 million in 2020 to now over 11 million users presently. And one of the other things, you mentioned it as well, they offer a full suite of products. So this is what makes them stand apart. This is not a niche bank. It's not a niche lending environment. They have investments. They've got banking. They've got all sorts of other different loans. They're giving people access to crypto, so the Ethereum, like we were chatting about earlier, that's something they can bring in here. But let's bring ourselves to the chart so we can go ahead and take a look here. Looking at the chart, it's if we're thinking about bullish moves, this is to a T. We're seeing that trend that's been developing here. One of the things that jumped out to me, I'm going to bring it up on the screen as in some of the drawings, is that earlier in the year we had the infamous golden cross. We had the 50-day cross over the 200-day moving average. And what's nice about this, it crossed over. There was some indecision in the market. There's a couple doji candles. We're thinking late in the middle of May, but then the market confirmed it. We rode up on the shorter-term 21-day average as a bit of dynamic support. And if we notice here on the chart here, this wedge that got drawn on, this is where short-term prices have continued to increase faster than long-term prices. So that bullishness has been continuing into more time. I just took another 20 seconds.
It's my time. I gotta get my time back.
Is there a technicality if you go over time but all in the same breath?
Yeah, exactly.
If you draw the breath before the bell goes, you
Been working on my breathing.
It's crossing through the yellow light.
There's no traffic cameras here. We're good.
I think the red light camera would have got you on that one. All right, here. Maybe I'll be a little more generous on the bell with here. We'll see. Let's kick it off.
Valiant points, of course, Jay. Valiant points. I'll be fighting the good fight for Team Bear today. And there's two areas that I wanted to spotlight for the bearish thesis and to start with. Let's talk about weakening shock absorbers. So what do I mean by shock absorbers? And we're talking about a specific ratio. It's called the Common Equity Tier 1 ratio, short for CET1. They've been seeing a decline in this ratio. It's currently sitting at 14.3% from 16.6% on a year-over-year basis. Which does indicate to me that the rate of growth that they're at right now is not sustainable for the long term, and that the capital buffers are not stable. Now, for those folks who may not be aware of what this is, it's essentially the measure of a bank's financial strength. So it compares the bank's core equity capital, so mainly common stock and retained earnings, against its risk-weighted assets. And in this case, for SoFi, it's loans, investments, and other exposure adjusted for risk. Now, commonly, when you think about what that ratio needs to be for top banks, it's between that 12 to 15%. For small banks, it'll be lower. SoFi is coming on the decline. So that is one that I'm keeping a close eye on. And I think that if they don't have those buffers, especially if we're going into a period of more uncertainty, where our word is being dropped again, what does that mean? Because SoFi's never been tested in that space before there. The second thing I wanted to bring up was moat and competition. I know you kind of said there's an advantage or there's a moat, but their moat isn't wide. It's more like a puddle in a driveway, in my opinion. And this is how I analyze it. Morningstar put it more eloquently, saying that the company has no moat to speak of, which could be a concern with increased competition. And let's talk about competition for a second. SoFi is looking to become the Amazon of finance. The problem is it's competing where Apple, Google, PayPal, and JP Morgan already own them all. Old school banks with deep-pocketed, fintechs, they're pouring cash into their own platforms. We know the digitization of it, so that means SoFi is going to have a lot to fight for the customer acquisition. We'll come back to that. Let's go and look at the charts. I've got the weekly chart that I wanted to pull up to take a zoomed-out view of it. What I wanted to start with is, yes, no doubt that, Jay, you mentioned that SoFi has been on a bit of a tear, but every time it's come into this area, the 24, it's rejected off it. It did break it this time. But the all-time high, which is 28, is what we've seen a major rejection, and that's what I want to focus on. In fact, on a weekly candle right now, we are seeing an inverted hammer formation, which signals a reversal, a bullish or bearish reversal that's happening at these tops over here, testing those other lows. The other thing that's notable on the weekly, this is the first time we've seen on the money flow index, which is volume weighted, which is like the RSI, that is over the overbought category there.
I gave you an extra 5 seconds.
I got an extra 5 seconds.
You made it work for
Go
you.
back and watch there. I actually counted up my fingers. It was like, all right. We'll
That was a yellow light crossing for me for
That was
sure.
a yellow light crossing for you guys. All right, you guys laid it out. Now it's time to go head to head with each other. If you got more of the platform to show us, dig in.
Yeah, let's do this. Let's start with just the gobs of money this company is making hands over fist. And this is not just a flash in the pan type of a one-time solo event. We've got $97.3 million on its most recent earnings. Sure, that might pale in comparison in terms of the scale to some of the other bigger banks are. But we're talking now for a new company. We're talking 7 quarters in a row of profitability. This is a big thing for them. And one of the things that they're doing is kind of an innovative approach they're taking to kind of that brand loyalty with their customers. It's through their SoFi Plus membership program. You can either pay for this program and you've got clients signing up to pay to get rewards from their bank, or you can sign up by having a direct deposit, so another way to make their customers stickier. This is getting them rewards. They're getting them maybe a discounted tickets to sporting events, but they're also getting other things. So it's one of those things that where that comes into play is where that deepening relationship comes from. Their CEO has said that 75% of their SoFi Plus members have engaged them and created a new product with their bank. So you can see how this is just growing naturally and organically.
Okay, Greg. Sorry, Jay. I'm not debating you, Greg. I'm debating Jay here. Getting ahead of myself. The point I wanted to make with that is, sure, they might be growing and monetizing their sort of member base. But the big fundamental problem with SoFi is the valuation. You can't ignore that. So a lot of that news is already probably priced in, but to a degree, when you think about it, let's talk about the trailing PE and the forward PE. I want to just start with that. You're sitting at 63.8 on, 56.1 on the trailing and 63.8 on the forward earnings. The industry currently sits at 14.1 on the forward, 23.9 on the trailing. Yes, granted, you would say yes. It's investors want to pay a premium price for a premium product, but this is expensive. This is not just premium. This is like eye-wateringly expensive. The other thing is when you have a company that is growing or in the growth phase, they turn profitable. I think in 2023, somewhere around there,
right
after those quarters. My question is, this business, as you mentioned, is asset light. It doesn't have a brick and mortar store. So where is the hang up where they're not able to, where they're spending all this money? Because they also have another problem with the spend. They've, on their balance sheet, they've seen an increased costing on their loan write-offs as well. So you have, so one of the things I wanted to point out was 29.5 billion at the end of June 2025, which is the last quarter. That's their loan book value right now. But they've also had to written expenses to the tune of about 627 million from 2024. Which used to be 101 million. That's a 6-time-fold increase in the
I want to go back to your statement around being overvalued. There's other ways to judge the company being undervalued as well. And one of the metrics that I was able to kind of cherry pick to support my argument was their price to sales. SoFi right now is around 3.7. For other kind of typically high growth company, it's 6 to 8x. So this is an opportunity to see there still could be room to grow if the loan portfolio and banking relationships are continue to be deepening. The last thing I'll mention is we've talked already a couple times here about crypto. SoFi has made unique investment opportunities available to their customers to bring in people that they're heavy into technology to get them into kind of like, all right, I'll take your hint this time.
You got to
You're lucky the bell jammed after the first one. You're going to get 3 quick in a row.
I miss a week and I just go rogue with all the rules, right? So yeah. So
give me my bell oil. We got to get Jay and check here.
Need a taser.
I know. Just trying to make up for that.
Yeah, that'll be next week. All right, so great debate, great counter. Now it's time to jump into the platform, look at possible option strategies around this. How could a bull possibly play it?
So if a bull is looking to play this, we're expecting the trend to be our friend. We want the trend to continue until there's signs that there's not. Now, in this case, earnings happens to be a few weeks out, towards the end of October, early November, depending on what it's sourced here. We haven't got a firm expectation there. So right now, I'm going to jump in the platform to take a look at a couple things, but the strategy we're going to be looking at today is a bull call spread or a debit call spread. So it is a directional trade that we're looking to continue the trend in the manner that we've seen it. So on the chart, what we can see now is that Hiran did mention that around the $24 level happens to be a kind of a key level, and the stock has attempted to pull itself back off of those levels, but there's been some resilience in the candles with these pin bar formations that are showing up, long tail candles, but with the price closing near the high with a short body. So they've been able to bounce itself off. So we're looking to continue some of the momentum going forward into where we can be profitable in this trade potentially. But let's go into the trading dab so we can go ahead and identify if we're looking to kind of pull our trade closer out towards earnings. I've identified the October October 31st. Yes, that's Halloween for the viewers here. Let's not forget that as identifying strike prices here. And then if we do take a look at the option statistics, the IV is low on the range in this, so it gives us an opportunity to buy options. So even if we are right and the trend continues, that we can still make additional profit if that volatility does continue to spike along with the earnings announcements coming up. So we can potentially make money on both fronts to increase our chances. So the trade that we could do would be to think about buying a near the money or at the money call. So thinking about these $27 calls, and if we go ahead and then think about trying to lessen our expense up front just to make sure we can kind of hedge our bets to a certain degree, is buying something a little bit further out. And if we go ahead and buy these 32s, we've created ourselves a $5 wide spread. Very directional trade. It needs to go in the way that we want, but as I said, we've got time on our hands. We've got the trend in our favor, and we're expecting volatility to increase as we approach earnings. So we've got three things that we can hang our hat on to hopefully make a successful trade.
If it doesn't go our way, what do we put at risk?
So in this particular case, when you're thinking debits on options, we're thinking about it's that credit up front. So I've been able to get into this $5 wide spread based on the midpoint right now of about $1.53. So that would be our max loss, and the gain would be the difference of the width of our spread. So $5 less that buck, around $1.50. So we're making potentially $3.50 with risking around $1.50. So fairly balanced.
Very interesting strategy there. How about a possible bear strategy?
Yeah, so coming back to it, and I know he was alluding to a bit of a scare tactic with Halloween. I'm going to go a little bit further after that, so we'll start with that. So starting with the chart, I've got the daily chart pulled up, and I wanted to just point out kind of the thesis how you could play this as a bear. So I've got the Bollingers pulled up over here, and you can see that the Bollinger Band, which measures essentially 2 standard deviations either side of the moving average, which is in the middle. And every time it's gone to this upper range on the 2 standard deviation, we've seen it kind of reject or mean revert back. And we're seeing that evidenced over here. So when I did my preparation, in fact, it was right at the boundary. And then today, of course, we've seen a big red candle that's emerging. But the trade I would be looking to play based on, kind of, and I'll bring it up over here, based on what we're looking to do is a long put butterfly trade. So what this trade essentially, it's a directional trade to the downside, of course. It's composed of three sort of legs to the strategy. So we're looking to buy the $27 strike put. This is going out to the November cycle. The monthly is there, which is the 21st of November. And we're looking to sell 2 of the 24s, which actually marks that area where we marked as a support, where we could see a bounce. And then also buying 1 further down at the 21 strike to just balance that other option that we sold on the 24 there. So it is a $3 wide spread right now based on the options chain. The other thing that's also working in favor is volatility on the VIX is low, and even just on SoFi itself, it's in like 19th percentile compared to where historically it sits in like the 25. So it does promote like having sort of cheaper like long view where you see volatility potentially expanding and then a directional move down over here. So this trade is at the time of when I set this trade up, it was costing about 60 cents, Greg. Idea is to look to get in at 50 cents. So for a single contract, that would mean we're paying $50 for this directional trade. If it goes in our favor, that means it needs to go down. It needs to kind of take a break at 24. That's ideally where we want it to take a stop at. That would mean we're profiting just the difference between the spread and the cost. So $3 minus the 50 cents. So about $250 is what we would stand to make on a single contract. In your favor. What if it doesn't go in your favor? So if it doesn't go in our favor, of course, that means it's going to go in Jay's favor onto the top side. And it has to break above or stay above the $27 level. In that case, we're going to lose the 50 cents. This trade is actually unique because there's 2 ways that we could lose on the trade. So one is it stays above, we lose it completely. But also on the downside, if it goes completely down to the 21, then we'll also be out the hole because it's a scratch. You make $3 on the way down, you lose $3 on the way down because it's a credit spread there. So all you're losing is the initial amount of $50 that you put down. Right. So we don't want to go further down as 21. We don't want to go past 27. So interesting strategies, guys. Thanks for that. And thanks for laying out the bull and bear cases for SoFi Technologies. Just a reminder to our viewers that this debate was for educational purposes, does not reflect our personal opinions about the stock. Now, before we move on, Jason, you're going to elaborate on trade rules. Yeah, trade rules. It'll be a quick demonstration. It's a really interesting tool within the platform that allows us to set order executions or triggers
off of other factors, right? So I think the easiest way is for me to show the audience. So let's jump in here and take a look. I'm going to draw up an exit of the trade that I just did. So we were long the 27 and short the 32. So to close that trade up, I'd be going and selling the 27, and I'd be buying the 32. So there's the opposite side of my spread. Let's make sure we get that in the order. There we go. All right, so there's the closing of the spread that I have there. In the system, I don't have it in my account, so that's why it does say open, but we are doing the opposite of the initial trade. So basically, what the order rules are, if you notice that towards the bottom of the platform it says activation rule, you can go ahead and hit the add button. This is where I'm able to set a trigger off of either another instrument, an index, or even the stock itself to see if certain conditions happen, I'm going to go ahead and exit my trade. So let's say we're thinking about this from a profiting perspective. I can go ahead and set this. If SoFi itself, its last trade, trades at or above, my max gain happens for me when SoFi itself is at $32. So if we can have it at $32 or above, and I go ahead and add that rule, you can see that it's plainly stated there at the bottom of my order. It'll show up in my order status if I do that as well. And so only when that condition is being proven to be true, at that point it will trigger order. So I can then put an order to maybe close my spread at like 450 or 475, as close to $5 as I can get, so I can then capture my gains and look for other opportunities to trade.
Sounds like a very useful tool. Thanks for laying that one out for us. And if you at home have a question about the TD Active Trader platform, or if there's a stock you want to see our trader debaters go head-to-head on, send us an email at td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It takes you to our TD Active Trader Live website. So if you can't join us live, be sure to visit the YouTube page where you can catch up on all the previous debates, watch this one over again. That link there is right at the top. And if you're going to take that trip, don't forget to like and subscribe. All right, before we wrap up, there's a lot more coming this week. We got a rare doubleheader, not so rare this year. They used to be rare. Bank of Canada in the morning at the rate decision, the Fed in the afternoon, the Bank of Canada. Market expectations, we're going to get a cut here, and you're looking at the Fed. What are we expecting here?
Yeah, so two-day meeting obviously kicks off today, Greg. You've got mixed economic signals, political drama, and questions about the central bank's independence from the White House. Interference all form the backdrop of this meeting and what will be announced tomorrow, making one of the most consequential FOMC meetings this year. But remember, the mandate is maximum employment and price stability. That's what they're juggling with. I think at this point, the markets are, the Fed funds futures have already priced in close to 96% on the 25 basis points cut. But it's going to be about the tone. Is there going to be more of a dovish tone that's going to come out of that meeting? And we've seen cooling labor markets and inflation ticking up a little bit, which also means that stagflation, that word is back, and along with the whispers in certain corners about the R word, the recession as well, to see how they're really shaping. So that'll be something to look at. And then I mentioned earlier on is the dot plot's going to be key as well. This is essentially each voting member expects interest rates to be at the end of the year, but also projecting to next year. And that's going to be a key look to also see what the dot plot shows up there. Looking forward as well, when it comes to specific stocks or equities, I'm looking at Micron. Micron's slated for earnings next week, September 23rd, after market close is what they're projected for. For anyone who's not familiar with Micron, they've really established themselves as a prominent player in the semiconductor industry. They provide another critical ingredient in this space, and that's memory and storage. And that really makes up a key part of the AI infrastructure ecosystem. So this is the Q4 earnings. EPS forecast is $278 by FactSet, which is marking 135% year over year, and revenue at $11.2 billion, which is a 48% jump year over year. So pretty staggering numbers. Micron, in fact, had come out early and already raised guidance thanks to it improving its memory pricing and also strong AI data center. Now, one thing that will be on focus for investors coming into this earnings will be DRAM and NAND flash memory pricing. So random access memory or direct random access memory, which is what AI specifically use case is. And they have a specific chip called the high bandwidth memory chips, HBM, which is a major competitive advantage for them. So just seeing what those shipments look like, what the pricing is going to be, and the demand from major customers like NVIDIA who are using it there. They've also committed to do $200 billion of making U.S. investments, namely, I think, in Idaho, New York, and Virginia, and modernizing their current production sites. So maybe more to come on that. Looking at the chart, the market is expecting coming into this earnings just out of it about a $18 move, which marks about 12% of the notional value of the stock right now. But you can see what's happened so far with the stock. We've seen this inverse head and shoulders, which is a bullish sort of reversal pattern that's formed here. We saw this big up chart. I am looking at the weekly chart, so just FYI. And what we do see is this $158 level, which is a key resistance back, it tested in 2024 midsummer. And it's rejected off of that last time, and to see if we can reject off of this time. Now, most earnings we know have kind of, even though the expectations about that 10 to 12% range, they've kind of fallen 8% for this earnings, except for some of these semiconductors. We know with Broadcom, which really blew it past the water, like hitting 20%. So we could see one to look out for if Micron can do something similar. So those levels to test at will be new price discovery hitting that 180 level, or onto the downside, we're looking at about close to the 140 level there. Coming to this earnings.
Interesting things to watch. Jay, you're going to take us to the land of breadsticks.
Take us to breadsticks and some pasta and some steaks. There you go. Some good stuff there. So we're going to look at Darden Restaurant, DRI. They've got earnings coming out before the bell, so on Thursday morning. They're going to, from a top line perspective, there's some big expectations actually from the street, both from an earnings per share, $1.99, and the revenues are going to exceed $23 billion is what the street expectation is. That's double-digit growth on both fronts of things here. Now that's all well and good to hear, but what I'm looking to hear is more from a macro sense. It's true that Darden has worked really hard to simplify and consolidate their supply chains, so their family of restaurants, right, your Olive Gardens, your Ruth Chris Steakhouses, your Longhorn Steakhouses, that they can kind of work together and create some efficiencies and cost savings. But it's really that T word that's hanging over everybody here. It's how tariffs are going to be impacting their cost of goods, right? There's just certain things they can't source domestically, right? We're talking about like the Parmesans or the olive oils of the world. They've got to come from specific regions, and we'll see how that goes and how that's going to impacting their margins. But jumping quickly into the chart here, we've got Darden up. They're big pullback actually down, right back down to that $200 support. It's that nice round number that sometimes people feel confident in buying and stepping in. Well, it's held as support over the last almost the whole last year. But we've actually seen some positive bullish signs leading up into earnings. You notice there's a bullish flag that's been presented there. That's a bit of a continuation pattern. We had a merge out of the top side of the flag, coinciding with another stronger move, just like we were talking about with Boeing earlier. We had a double moving average cross here to see if it can stay, but with it's continuing to move. Well, and now that I actually look at this, with the joys of live programming, it's now kind of broken out of that tight range it's been trading in. It was looking like it was maybe going to test that 220 support. So earnings we'll see if it'll be able to continue back up towards 220 or 200 might be in the offing again, and those will be the key levels we're looking to see if they can hold going forward.
All right, lots of great information there. Another great show, gentlemen. Thanks very much, and we'll see each other again next Tuesday, I believe.
Sure. Got it.
All right, and actually, Kieran and I will be back on Thursday. Active Trader Live is going to 2 days a week, bit of a different format.
Big debut.
You want to check that out at 10 a.m. as well. That's the show for this week, though, for the Tuesday edition. As always, investors should perform their own due diligence before trading. Thanks for watching.